Let me just express the importance of moving averages. The simple moving average is a old school indicator that most people ignore because it's old. But just because it's old doesn't mean it doesn't work. Forex has existed for a while now and moving averages have as well. So using them makes sense. It worked before, it will work again. So let me explain some moving averages. I'll explain 200 moving average and 100 moving average and how can you trade the long-term trends and make a lot of money. So let's begin this session. Right, so the first thing we're gonna need is a indicator. Of course, we're gonna write over here moving average. It says moving average, but it's actually a simple moving average. So let's just click 2 times to get 2 of them. And what we're gonna need now is just click settings, and we're gonna use the length of 200 on one of them and gonna use 100 on the next. Right, now looking at the NZD USD currency pair, this is the weekly time frame, so which means that one candlestick represents 1 week. What can we see? Not always it was respected by the moving averages, but it also has multiple times, and let me explain why. Look at this trend over here. Look at this nice trend over here, multiple times respected by the moving averages. But why did that happen? Well, if you know a little bit about support and resistance, you can clearly see that there was support and resistance in these 2 areas. This area over here, support and resistance, let me make it yellow, and this area over here as well. So we know it was a support resistance areas. It was in between the 100 and 200 moving average lines, as we see over here where my pen tool is. Look, it's inside the moving average. Also the resistance and support is there, right? So what happened in this area over here? Let me explain. It broke out towards the downside, breaking this weekly support which was respected for a few years. 2016 to 2018, it was respected multiple times throughout, and you could have made a ton of money by just using support and resistance over here. But this is not the topic. So what happened here? It broke out towards the downside, right? Now why would this be an amazing trade towards the downside yet again after it pulls back towards the upside? I explained this to you guys many times before. After a push and after a break of previous area of sensitivity, there's always a pullback. The pullback happens here. And why is this important? Well, the first thing, the support and resistance area over here was respected multiple times. We can drag the yellow zone over here as well. You see it, it's support and resistance area. What else is important? The moving averages, the 200 and 100 moving average. Look where it's crossing. It's crossing its path. So we have now the moving averages and the support line that we have drawn on the weekly time frame blocking the path for the NZD USD dollar to prevent it from shooting towards the upside, right? So these 2 methods, the 100 moving average, the 200 moving average, and the area of sensitivity, which is the previous support which was broken, now became resistance. Obviously it's gonna have a lot of sell pressure in that zone because it was previously respected multiple times. It's also a very influential level. It's near the 0.700 level, which is a psychological level as well. It's around this area, so we know that it's a very strong area of support or resistance, whichever way you look at it. So that's why trading this towards the downside every time it pulled back here was an excellent trading opportunity, and you could have made a ton of money. I'm telling you guys that now. Even when it pulled back here, made a new lower low. Look, it pulled back to the previous area of sensitivity, very close to here. Also the moving averages are here. We saw also a bearish engulfing candle close. You could have entered after that bearish engulfing candle, drop back down yet again, making a ton of money. Now we move on. So it makes a new lower low yet again, previous area of sensitivity here, shoots past it. Look where the market is now. This was another previous area of sensitivity, right? We see it. It bounced here multiple times. We probably see it a little bit more on the daily, but we're analyzing on the weekly just to make things slower. We obviously saw this push here, what's important? The 100 moving average and the weekly candlestick is actually a nice doji, right? The doji means is the candlestick is like this. It means it's nearly trying to turn around. We know it's an area of sensitivity here, multiple times respected towards the upside or the downside as well. Currently trying to respect it yet again over here. Boom, shot back down. As you can see clearly here, making a new lower low. This was the previous low, was broken by a bearish engulfing candle close. This candle close here confirms the trade towards the downside, or you could not just maybe place a little bit smaller trade on the daily, on the 4-hourly, because obviously this is the weekly candlesticks. The daily would have 5 more candlesticks which would show price action, and you could potentially find a trading opportunity maybe towards the upside as well. But nonetheless, this was a steep break towards the downside. Now look what's happening. So this candlestick hasn't yet reached the area of sensitivity, but what's important over here? What's to expect on NZD USD currency pair? Well, look, it was a previous area of sensitivity here multiple times. Look, it wasn't respected here, pulled back with this candlestick, as you can see, touching the area of previous resistance, which shows that this resistance or support zone, whichever way you're looking at it, is still valid. Currently market is moving towards the upside, probably will turn around in this zone or in this zone. In between the moving averages, somewhere in between you can start selling. So if you're a long-term trader, you could potentially wait for some sort of price action on the daily time frame. Let's say a bearish engulfing candle close, you could potentially enter, or wait for a doji as we saw over here as well, respecting the 100 moving average line, go into the lower time frames, see what's happening. Currently, as you can see on the daily, it's moving above the moving average lines, which shows bullish pressure. So we're not seeing selling pressure as of yet. So very likely this weekly 100 moving average zone will be reached, or probably somewhere in between in the middle, because we obviously have this downtrend as well. Moving averages are here in between, so very likely it's going to have some sort of junction or some sort of blockage over here, and it will turn back down, reaching this previous area of sensitivity. If it breaks, then it will shoot here. If this breaks, then it will make a new lower low, and then I don't know where it's going. So I hope you enjoyed this little educational session. If you want to join my VIP trading signals, we are dominating the markets as always. It will be the first link down in the description below. Make sure to follow me on Instagram, Facebook, Twitter, and all of the other social media platforms. When I have time, I usually speak to you guys, answer a few questions as well. Anyway, peace out, take care, stay safe, and goodbye.